Hey everybody, welcome to Trading Capital's daily analysis video. We're going to talk about natural gas. It is May 3rd after hours around 4:30 p.m. here on this lovely Tuesday. Jumping right into the UNG chart, what an amazing price action for natural gas. We have witnessed a huge pop and rally. It's sad that we didn't get to cover our natural gas short when it hit support here. Like I said, it happened during the hours where the market was not available to North American trading, but that was our intention, was to cover our short and then look for that bounce off of support into this double top resistance and potentially short it again. Now, the crazy thing is, did I expect it to go into double top resistance? No, I did not, but I did expect you to have some sort of a bounce. Now, the beautiful thing about this UNG chart here is the level I was watching was here, this gap fill. Let me just make this line darker so we can see it clearly. There we go. So this yellow line gap fill, that was the next level after you broke out of this little channel that you were trading in that I wanted to see natural gas fill. Now, the key thing is that you've actually created two gaps. You have this gap on the chart, and then you also have this gap on the chart. But what's so significant about this gap over here is that you've now created a double gap. So you have this original gap and you have this original gap, and notice how they pretty much are almost symmetrical, the two gaps. So when you have a double gap, one gap first and then the other gaps over the first gap, that is a significant technical signal. The chances of you now coming down to fill this gap, which will inherently be close to filling this gap, is very, very strong. So today's price action, we added to our KOLD. It was roughly at this 27.93 mark when I bought some of the KOLD and issued that alert. So we have a pretty big position shorting natural gas. I also did day trade natural gas and made a beautiful, beautiful return. But nonetheless, we have a very, very full position, a little more than I like, but the fact that natural gas has risen over 120% in basically 3 to 4 months is just astounding. When you have an energy commodity that rises 120%, it gets to certain dangerous levels where politicians now have to step in and think logically about their people. I'm specifically talking about Europe. Significant pressure when it comes to their energy security. That's why we've seen the pop in LNG, liquid natural gas, that's being shipped from the United States, because obviously with Putin closing down a pipeline to Poland and I believe Belarus and a couple other European countries, obviously that puts a strain on the supply. And when you don't have enough supply but the demand stays the same, then that's obviously where the price rises substantially. But I think the worst of the news is over, and it makes sense now that the worst of the news is over. We've hit that double top signal. We've had a beautiful, beautiful daily reversal candle at the double top resistance on the UNG. So that is exactly what I was hoping to see, was this reversal candle, almost a topping tail on natural gas, or the UNG chart to say the least. If we flip to the actual natural gas chart, you can see here, again, you had a pretty significant reversal. You did make a new high, but you were still kept in check by resistance. Now, you do have another support line, your original support line that you bounced off of first. You have sustained these prices for a decent amount of time, where this first upsloping blue trend line, you could expect a small bounce. I don't think it's going to hold for very long, because I do think now you have the top in the markets. And the interesting thing that I'm going to try to challenge me on, whoever's watching this video, today we saw CNBC for the first time in months talk about natural gas and how it's on this amazing tear. I am going to put my head out there and say that we have hit a top. There are so many examples, and this also happened with oil, where the mainstream media, CNBC, one of the biggest investment mainstream media companies there is, when they start talking about an asset class, especially when they've reached a peak, it usually signifies the top. So I challenge people to, in the next 1 to 2 weeks, to see if if CNBC talking about natural gas today on May 3rd, does that signify the top? I certainly think so. CNBC is a great sentiment gauge. I don't listen to their investment advice, but often when they are now talking about an asset, you've either reached a top, or when they're talking down on an asset, you've likely reached a bottom. So flipping back to the UNG chart, again, we added to our KOLD, which I'll show you here. The KOLD has this beautiful bottoming tail at the chart now with substantial amount of volume. So you can see here, this volume again negates pretty much 1, 2, 3, 4, 5, 6, 7, 8, 9 of the last days until you had this massive gap up on the chart. The beautiful thing though is when you look at a weekly basis on natural gas, we still originally have this weekly bottoming reversal candle intact. Today you pierced it, but you were saved by the end of the day to close still above this last wick. So this bottoming reversal candle with this massive amount of volume is still intact, and that's why I was very confident in adding to my my natural gas, my KOLD position again, as well as taking on a massive short position in the UNG, which is paid handsomely. So I think once you come down to natural gas and fill this technical gap, it's only a matter of time before you fill this one. Believe it or not, the markets with a reversal signal like this, we could have some sort of gap down like we did here again. And that would be pretty, you could see a gap down tomorrow in natural gas of say 5 to 10%, no problem. When this asset starts to sell, it really, really starts to sell. And when you see a volume bar to the downside that negates pretty much the 1, 2, 3, 4 of the last bars, it shows you there's tremendous selling occurring now. And it's likely that since this volume is bigger than the previous two green candles here, it's likely that you negate both of these green candles in the very near future. So just jumping back to the natural gas chart, another key area is that on today's daily basis, you actually closed below that previous closing price at the high. So that's, again, another bearish factor. I was watching this all day, and it certainly left it to the very end in terms of natural gas closing below these pivot closes here. So again, the fact that we're closed below those is very, very good. The fact that we've had the worst, when you have a pipeline, an energy pipeline, a natural gas pipeline that shut down large portion of certain countries in Europe, their natural gas needs, that's pretty much worst case scenario. And the fact that we could not hold the highs or close above the previous high tells me that this is potentially a failed breakout. Now we need to see confirmation to tomorrow, but the fact that we have this beautiful reversal topping candle on UNG, it really again dictates that the probability state there's substantially more downside for UNG. We just have to be a little more patient. I was expecting to be paid out of this trade, but when you go into expecting to be paid out of a trade, within a certain time frame, the asset class can always surprise you. That's why it's good to just, take it day by day and let the technical levels tell you where to buy and tell you where to sell or tell you where to cover your short. So just be patient with natural gas, but I think we've now reached that double top. We've had the failed breakout. And tomorrow's confirmation day. Will we get more follow through downside? I certainly think we will. If you add it to your KOLD, beautiful job. KOLD I still think has substantial upside all the way to this 1258 level. That'll be a pretty interesting level to take profits. But again, we should get some technical bounces along the way on natural gas. Since you've hammered off of this trend line once, I do think that you'll hammer off of it a little again, but it shouldn't be as a robust bounce as this one. You may do only half of that bounce per se. Where I'm looking to take profits, I'm probably going to be looking towards this next level here, around this, just depending on where it is, maybe around the $6 mark. That would give me a nice gain on my position nonetheless. If we look at the oil chart, oil closed below the 50-day moving average. You can notice here, let me just take this away. So we've been trading inside of this, basically this pennant formation here, this wedge formation. And what you notice here is that we broke out of the wedge, you set up confirmation day for the next day, failed to confirm this breakout, then you sold off, you got saved with this beautiful daily reversal candle, which set up confirmation day for the second time, which would have been today, but you failed again at confirmation. The more and more times you fail at a breakout, the probabilities dictate that you will likely head back down to the next support level, which just so happens to be this flat bottom. Now, the thing about this flat bottom level of support, you've hit it once, you've hit it twice here, 3 times. If you hit it again, the probabilities dictate that when you hit a trend line of support more than 4 times, it's the likelihood about 70% of the times it breaks lower. If you hit a level for the 5th time, now it brings it up to about 80% probability that it breaks lower. So just keeping in mind the statistics will give you a way better chance of succeeding on your trades. And it's interesting to see if natural gas starts to get weak right in around the same time as oil as well. So look for more downside in in natural gas and in oil. I think the energy commodities are certainly overdue. It's beautiful to see that we had a nice reversal from the highs of natural gas. Will we see continued downside tomorrow? Time will tell. It is the big Fed day tomorrow, so there certainly could be some hawkishness that could bring down natural gas. The markets are kind of a little oversold and have been showing signs of strength. Some certain companies have reported decent earnings, which have given the markets a little bit of a lift in the short term. But let's see what the Fed has in store for us. I think we get the 50 basis point hike, which would still make us deeply negative in terms of real yields. But we shall see how the markets react. And there's probably going to be some sort of whipsaw action like there always is on Fed Day. But we just got to wait for some sort of pattern setup, some technical signals to either go long or short this market. But with inflation being the main mandate of the Federal Reserve, high energy prices are one of the biggest causes of inflation. Obviously, it's due to the fact that the Federal Reserve has printed oodles and oodles of trillions of dollars. But now that they're withdrawing it, this should start to put pressure on basically everything in the market. Okay, so nothing is susceptible to the bear market. Everything is susceptible to the bear market. There's only a very few amount of asset classes that hold up better, but even the strong ones eventually get pulled down when the bear market is at the lows.